4 phases of focus. Now, here we're going to wind up on all that we have learned. Like, we are going to see on what we need to do in this market. Like, all well thought signature trades have 4 phases of focus. We have the before entry phase, we have the entry phase, the reversal phase, and the take profit phase. Now, on the before entry phase, basically it's the analysis. It's the analysis phase. Now, what we do before entry is we analyze the charts. So it's not a simple thing to correctly predict the next move in any market, and trading the currency market can be even trickier than trading other markets. Okay?
Yeah.
Goes beyond wild guesses, goes beyond intuition and rush decisions. Like, we need to analyze the price charts, we need to forecast on what the price movement will be, and basically we also need to choose the most suitable currency pair to trade using the disparity. And those are very crucial for your long-term success in this market. And as MQP traders, we have taken one step further and we have considered every possible factor which has the tendency to affect the FX rates. So basically, what do we look for in price during the analysis? Basically, we look for higher time frame manipulation. We look for the market structure based on the monthly and the weekly time frame. If there is any trend change, so the seasonal move, we also reflect the COT data, what it's telling us. We also look for the market flow when you come to lower time frames, the daily and the hour 4. The position of exponential moving averages is very important in our time frame. And the hour 4 basically looks for if there is any harmonic pattern and what the TDI is telling us. And in the hour 1 is where we look for the market maker cycle. So the levels, the ADR, also the quarter prices are well seen on the hour 1. And there is where we make our anticipation. So let's go quick to the charts. Maybe analyze. This is EURGBP. So we start with the monthly chart, okay?
Yeah.
Okay, so on the monthly chart, we look on the market structure. So we look on the support and resistance points that are close to the current market price. I usually use the line chart, which is shows where exactly the market has reversed. We don't have the weeks here.
Okay.
So these are the support area close to the current market price.
Yeah.
We also have this area here. And we have an area of resistance above here. And another area of resistance should be here. Okay.
Yes.
We also look at the order blocks, like the current order block is around this line here.
Yes.
Okay. And the position of EMA. So we have the 50 EMA right there. Okay.
Yes.
So the current market structure based on the monthly is still an uptrend, okay?
Yes.
Maybe until price reaches at this point, then we can have our anticipation. And on the weekly, we have a very good support area. There.
Yep. Yes.
The market is still going up. So it will buy until this point, I think. The 200 EMA. Okay.
Yes.
And then when you go to the daily chart, here is where we look for the market flow. So here is where the peak was set. We have level 1. And then we had a retracement here. We had level 2 going up. So this was
Yes.
a tricky scenario here. Like
Yeah.
the 200 EMA, we usually use it as a moving support or resistance. And we had a bounce on this area. We had this spin going out. But then when pound news came, it did break this 200
Right.
EMA. And we had an uptrend there. And we have an harmonic pattern. This is a butterfly indicating a downtrend. The TDI here, when you look at it, it shows that we are having a shark fin on a level high. Okay, it's around
Yeah.
level 70. When you go to the hour one, we look at we had a peak reset here, right?
Yes.
So this is the last peak that was formed. Our ADR is 67 pips. So we look at if it has completed the 3 times ADR, okay?
Yes.
So 1,
2.
2, wow, it's there.
It's complete.
So basically, our higher time frame tells us that we still have an uptrend, okay?
Yes.
So here we will be looking at where price would basically have a retracement and then a continuation going up, all right?
Yes.
And on the hour 4, it has almost touched the CMA.
Yes.
But if this peak were to be set in a very good way, then we should touch the CMA and then have a downtrend there. And our first area that it should touch is this quarter here. So we have price bouncing around the station zone. We know if price bounces around the station zone, it will come back to this quarter, right?
Yes.
Like what it did here, like touched around this half point, went all the way to the quarter. So we need for price to come to this quarter. We have here what we call a fair value gap, okay?
Yes.
And this area here.
Yes.
So we have a fair value gap here. So this will be our best area for price to reverse and continue up. Okay.
Yes.
So for today, we should expect for that stop and high drop, and maybe tomorrow it will reach this area and have a peak reset set for a continuation going up.
Up.
So that is euro pound. Let us have a look maybe on gold. Let's look on one commodity here. So when you look at the monthly time frame for gold, you would see that the speculators usually buy a lot.
Yes.
So this is safe haven for them. But here, when you look at it, it has set a very good area of resistance.
Yes.
This is a superb area of resistance. And on the weekly, we had equal highs even at this point. And we are still having a downtrend. So if you look at this, we have an order block right here. So this might be the best possible area for price to reverse. If it breaks this, then price will continue to this area of support. And the next one would be this one. And the 200 EMA. And let's look at an order block that is here. So I have another block right there. This one. Okay. Are we together?
Yes, we are together.
We have another block here. So if price would bounce at this point and have an uptrend,
I'm seeing it.
our first area we should look at is this one. Okay. And let's look on the daily if
Yeah.
there's maybe a mitigation block here. Like we should have a mitigation block around this area. Oh, it has already retested the mitigation block here. You see this retest here? This is a retest on the mitigation block. Okay. On the daily, we had like the first level, a very good consolidation. And this is a very big level also. And we are around the 200 EMA. Like this area is very tricky, okay? What does the R4 tell us? The R4 tell us we had a peak reset here. So we first had a peak reset here, it came all the way down. And then it came back to another peak reset and we are going down. You can see here, we're on that area.
Yeah.
So personally, I wouldn't take a trade on gold, like until it establishes a clear direction, because right now it is in an area where it needs to establish a direction, okay?
Okay.
Like this was the latest peak reset here. And
Yeah.
area is around 292. You can see it's still having a very good downtrend and it moved very early.
Yeah.
Very, very early today. So suppose it has a retracement here. Maybe during this London session going to New York. Then our retracement, I expect you to come and hit this low of New York session. Like the low of New York session should be here. Okay.
Yeah.
So I should expect for price to come and bounce at this point and then continue down because we're still seeking to find this low here for now.
Yes.
So if you were to take a trade, that's the best trade to take for today. Okay, so basically after you have done your analysis, you have done your anticipation, then you go to the second phase of focus, which is the entry phase, where we go to the 15 minutes chart. So 15 minutes manipulation. And here is basically what we're looking for is the period setup. Like we look at the Asian box, is it less than 50 pips? We look at the stop point, is the stop point as I anticipate stop point. Like if we expect the stop point high drop, then we should expect we should only take a trade when it has done that.
Okay.
And after the stop point, as the London pattern presents itself, do we see an M, do we see a W, do we see an A top, a V? So the London patterns, and after the pattern has been formed, then we have the confirmation, the 5 and 13 crossover. So we have the entry confirmation there. And the timing also is very critical. We usually trade during London session and New York session. Always trade in line with the peak. If the peak is high, look for sales. If the peak is low, look for buys. And always use a stop loss.
Okay.
And these are the few trades that we have learned. Like we have the blue tracer trade around the peak. We have the ID50 trade after 1350 crossover, price came and bounced around the 50 EMA, so that's an ID50 trade. This is a safety trade, like a stop and high drop.
Yes, safety trade.
We have blueberry trade, a break and the retest around the blueberry. Though we wouldn't take this,
Blueberry.
it is during the Asian session, though it is Audi pair.
Yes.
We also have, this is Emma combo trade. And here we had a peak reset around the 800 EMA. So peak reset trade. And we also had a peak reset on EURGBP with an ID50, a 50-50 bounce trade. And we have other trades like here we had a bullish order block and price came to this, formed a pattern again, we had a continuation up. We had a bearish order block right here. We had a return to the order block and then a continuation down. So it's a very good sell there. Here we had a breaker. You can see we had a retest here. So you get at least 50 pips here on this. Okay, so we also have other entries like along a market maker trend, when you see price might be breaking a station zone, retesting it and having a continuation, breaking a large quarter point, breaking the half points. We also have, though nowadays I don't usually use it a lot, the Fibonacci. Like we have the Caribbean market, the premium discount markets, but I found that they usually go along with the order blocks. So the order blocks are more suitable. So these entries are usually supported with other conferences since we are looking at indicators and we're not really sure if price will interact effectively with the indicators unless we have other conferences. Okay. So other conferences should be available for you to take that trade. Like, is it along the market maker trend? Yes, therefore take a trade. And reversal, that's the third phase of focus. Like you have now taken your trade, you are now in a buy trade. So we know that after the market has formed a pattern, we expect for 3 intraday levels on the 15-minute chart in order for us to exit a trade. And usually it reaches the ADR value today. Okay.
Yes.
So when you see that you are in a trade and you see the first retracement, you know that this is that simply a retracement. It's not a reversal. The second retracement, the same. Sometimes the dealer would have a very sharp retracement,
Yes.
and then would continue going up. So we need to trust the process. We need to trust that we will see the 3 intraday levels because it has always worked. Okay. If you have taken maybe a peak trade on the hour one and you expect to swing it 3 levels, then you should really hold it 3 levels. Okay. Once the 3 levels are done and you see price having a reversal, then this is a real reversal. Get out of the trade. And we have the take profit phase, like always have your exit point. Okay.
Yes.
Common TP levels that I use, we have the ADR level, we have the blue tracer, we have the quarter prices, and also the exponential moving average. Example, if I anticipate that for Euro pound trade, perhaps we expected for the first area to hit would be this quarter. So we would put our first TP here, where the ADR low is also there. And second TP should be at this exponential moving average here, where we expect for our peak reset, okay? So those are the two areas that we look for reversal.
Okay.
Well, those are the two areas where we can exit our trades.
Good.
If you're taking a peak trade, you can swing it, 3 levels.
Okay.
And remember to do the break even, like this is our chart, a peak. Price has moved level 1 and is consolidating, and your trade is here. Move your stop loss above here, break even it. Then the trade will continue level 2, level 3. It's very important for you to break even.
Okay. Thank you.
Okay, so you need to focus on all the 4 phases of focus. Spend your time on them and not on the entry rules of a trade only, okay?
Okay.
So you need to focus on all the 4 phases of focus. And that is basically all that I have for today. Like now you can simply do your analysis and share your analysis with the group or with me. We have certain rules here that I think they're important. Like, for example, in the group, okay?
Yes.
For example, in the group, you can simply have different anticipation with another trader in the group, okay?
Okay. Yes.
It can happen. Like one trader's buy bias may exist inside another trader's sell bias, and you can both be correct. Like you need to understand his or her viewpoint, and therefore you would understand maybe where he's heading. Like maybe he's looking for quick 20 pips, quick 30 pips, where for you it's simply a retracement and then a continuation of the same trend that you're looking for, okay?
Yes.
So you're both correct and you can both achieve your profit objectives. You can both be wrong. Like for example, last week on GBP, I would trade on Friday. Let's look on GBP, I would here. See this trade. The peak was here. We had a peak formation low.
Okay.
And you can see this is like a head and shoulder pattern, huh?
Yes.
But first we had our pattern right here, like the W was completed here. So you can enter your trade here. But if you look at it, immediately they had a stop and come into this area. And then it returned back. Eh? And if you look at this, it also formed an M here. So some would see like this would continue to sell. Some would see like this would continue to buy. And if both you have entered your trade, so for this day, you both lose because the market was simply chopping here. Did not have any significant movement. And once the market was opened, is where it moved today.
Okay.
I had a buy trade on it, and thank God that I did hold it for today on Audi and NZDs. So they went all along with my anticipation. Like I took a trade here and my stop loss was below here. So they took me out at first. And later on this point, I think I took another trade and I put my stop loss below here. Yeah. And I left it for today. This is Euro NZD. USD had a very good peak reset here. And if you look at this, the peak reset was actually here.
Yes.
And I remember I took a trade on this area. It chopped, and then they came and took me out. I think this was the day when there was the Forex news. So they used the Forex news for a stop hunt. And then after the stop hunt, if you look at this, price was simply bouncing on the half point, coming to the quarter, half point, came back to the quarter again. And here it did break the quarter, went all the way to the station zone, so they came back again. So I took a trade again here, and my target was the 200 EMA, and it reached that point very well.
Okay.
So basically, what I was trying to show you is that the market sometimes can be very rough. Like you expect for the market to give you like black and white, like a very good stop and draw rise, a very good stop and high draw, but then it can give you like a rough scenario like the one on Euro NZD, the one GBP AUD. So as a trader, you must be on the gray phase, like you must be comfortable with less than perfect visibility. And the most important thing in this market is for you to manage your capital. Like
Okay.
you need to be very keen to your risk management in order for you to be there to take another trade, because sometimes you may be hit and you cannot when you have entered like with high lot sizes, that when you're hit you burn your account, then you'll not be there to take another trade. But you need to manage your risk very well in order for you to take another trade, to take the next trade, the next profit, the next profit, and eventually it will materialize and you'll be in a good profit. Okay.
Yes.
So there is no perfect scenario in this market. Like it cannot give you 100%. If you look at how other traders are giving anticipations on the group, you'll sometimes see that their anticipation, maybe they have like at a certain price level, they expect for price to reverse, but then it sometimes do not reach that level, but they have taken a trade. Sometimes it reaches and overshoots a bit, but then when it comes back, they take a trade. So they have entered the gray phase, okay? And the only way for you to enter the gray phase is for you to master the 4 phases of focus. It is very important for you to stay on your charts for now. Like the charts will be your next teacher. You need to mark up your charts every day, anticipate stop and zone, entry zones a day before it happens. It's very important for you to do the analysis and show up to the market, look at the setups. If the setups are not clear for you, then there is no trade for you for that day. Hello?
Oh, I'm here. Hello.
Hello. So as I was saying, like show up to the market, look for your setups. If there is no setup for you, then there's no trade. Like you should never take a trade just because you are watching the charts. You should take a trade because the setup is clear for you. Always trade when the dealer has hit the stops. Learn to be highly selective on your trades. Like I've taught you a very few trades, so stick to them. Stop chasing
Yes.
trades once they have gone. Like if your trade, if maybe you expected for a trade to buy and you see that you are late on a trade, like it has already moved from the W and maybe it's here, don't chase it. Like don't enter buy it here. Just leave it go. There will be another setup for you to take. Always trade on the basis of a close candle, preferably with multiple confirmations. Hello? So
Hello, I'm here.
okay, always trade
Hello, I'm
on
hearing you.
always trade on the basis of a close candle. Like when you are waiting for the pattern to appear, you should also wait for a candle close.
Okay.
And sometimes rather than aiming to make many pips per day to achieve your income targets, you can use a method that's highly reliable and you can wrap up your contract size, take a few pips, and then you go out of a trade. Control your fear, control your greed. And when you're doing your analysis, do not use your phone, please use your PC. But if you're taking your trades, you can use your phone. Your PC has many, the template is on your PC, so you can simply have a look on it. And remember, it's okay for you to have losses as long as more of your trades are in the money than out of the money. Okay. So basically, for today we end here. Okay.